Hi, I want to be respectful of everyone's time, so I'm going to get started here. Hello and welcome, everyone. We're so glad that you could join us for today's free webinar on improving financial management across our organizations. I'm Krista McPeak. I'm the Senior Vice President of Programs here at the Community Foundations of the Hudson Valley. Each year our community grants and other competitive awards support dozens of organizations throughout Dutchess, Putnam, and Ulster counties. And after listening sessions with many of you earlier this year, we launched an ongoing effort to offer professional development and capacity building opportunities through a series of new webinars and workshops like the one we're having today. So thank you so much for joining us. Today's session will focus on building strong financial systems through sound policies and controls and fostering organization-wide accountability and collaboration. And we are thrilled to be joined by Roberta Katz, who partners with nonprofits to build strong finance operations. After years in the for-profit sector, she pivoted to serving nonprofits and later founded Roberta Katz Counseling. She has held senior financial management roles at the Avon Breast Cancer Crusade, JCCA, which is the Jewish Child Care Association, Community Access, Include NYC, and the Hispanic Counseling Center. Roberta will touch on many of the questions you all submitted in advance, but we also welcome your questions throughout. So feel free to drop them in the chat. We'll be monitoring and can kind of jump in as appropriate to field those to Roberta. And as I mentioned to folks when you first got on the call, we will be following up with this recording and any slides. So with that, I'll turn it over to Roberta.
Thank you, Kristen, for your warm introduction. I'd also like to thank the Community Foundations of the Hudson Valley for giving me the opportunity to present this webinar. In today's webinar, we will be discussing the relationship between finance and mission, key components of a strong finance department infrastructure, the role of leadership and program staff in maintaining a strong finance department, collaboration in the budgeting process, next steps for leadership, and finally, best practices for fostering collaboration. Silos exist in an organization when departments or teams work independently and do not communicate with each other or share information. However, breaking down silos and fostering collaboration between the finance department, leadership, and non-finance staff is essential for building a strong finance department that enables the organization to successfully carry out its mission. There's a direct relationship between finance and mission. These are two key responsibilities of a nonprofit finance department. Not all of your organizations might have a full finance department. You might just have a finance staff member who oversees your finance function. This applies in both situations. The first key responsibility is to implement processes and systems to safeguard the assets of the organization, such as its cash, its investments, and its physical property. And by fulfilling this responsibility, there are financial resources available to run the organization's programs, deliver services, and successfully carry out its mission. The second key responsibility is to generate accurate and timely financial reports and financial data used by senior management, your board of directors, financial institutions, donors, and funders. And by fulfilling this responsibility, there'll be reliable financial data and financial reports available to make important decisions about the operation of the organization and to develop strategic plans. So, for example, your senior leadership might be deciding whether to continue a program that's consistently been operating at a loss and that's not really aligned with your organization's mission. To make these types of decisions, they will need timely and accurate financial data and financial reports. These are 5 key components of a strong finance department infrastructure: accounting policies and procedures, internal controls, digital transformation, effective contract management, and timely and accurate financial reporting. And we will be discussing each of these on the next slides and the importance of collaboration in maintaining them. The first key component of a strong finance department is having accounting policies and procedures. Policies are the principles or rules upon which important decisions are made and courses of action are determined. So, for example, if your organization has a business credit card, a policy might be the organization will issue credit cards to officers and program directors only. Those credit cards are issued to them based on their business needs and upon approval by their supervisors. Procedures are the steps to be followed to ensure that the policies are consistently carried out. So an example of the procedures for the policy that I just mentioned is employees are issued credit cards only when requested by their supervisor in writing, directed to the credit card administrator. The request should include the business purpose for the credit card and its credit limit. So these are the steps to be followed to ensure that the policy is consistently carried out. So why does the finance department implement policies and procedures? There are many reasons, some of which I've listed here: to protect the assets of the organization, such as its cash, investments, and physical property, which I mentioned is one of the key responsibilities of a finance department, so that the organization can run its programs and successfully carry out its mission. An example, an organization must have policies and procedures in place to ensure that all checks and cash received are properly accounted for, properly recorded in the financial records, and promptly deposited. Another reason is to implement internal controls, which are checks and balances that mitigate the risk of unauthorized or even fraudulent activity. An example, all organizational spending requires supervisory review and approval. Also, to ensure compliance with regulatory and accounting requirements. So if your organization receives government funds, the organization must comply with regulations from the government funders, and there are many regulations. Also, with the Internal Revenue Services requirement to file a Form 990, which is the organization's annual information return. And finally, to support the accurate recording of transactions in the financial records, which I mentioned is another key responsibility of the finance department, in order to generate timely and accurate financial data and financial reports used by leadership, your board of directors, to make important decisions about the operation of your organization. Documenting the policies and procedures in an accounting policies and procedures manual helps to ensure that the policies and procedures are uniformly and consistently followed. The manual should be updated at least annually, reviewed by senior management, and approved by the audit or finance committee if you have those separate committees, prior to being approved by the board of directors. So this is a sample table of contents for an accounting policies and procedures manual. There's no one size fits all. It will vary based on the size of your organization, the complexity of its financial operations, and its personnel. However, these are pretty standard sections in all policies and procedures manuals. I just wanted to highlight a few. Section 4, accounts receivable and cash receipts. Section 5, accounts payable and cash disbursements. Section 14, policies and procedures regarding your budgeting process, and we'll talk about this a little bit later in the presentation. And Section 17, conflicts of interest, addresses the need for the organization to have a conflict of interest policy to ensure that decisions that are made by key senior leadership and your board of directors are always made for the benefit of the organization and not for personal gain. Collaboration related to accounting policies and procedures. Developing, implementing, and enforcing effective accounting policies and procedures requires collaboration between staff within and outside the finance department. So areas where collaboration is needed: organizational spending. Staff throughout the organization spend the organization's funds, and there must be supervisory review and approval of all organizational spending, ensuring proper supporting documentation that there's a valid business purpose, and account coding for proper recording in the financial records. Another area is in revenue cycle billing. Program staff who provide services must submit complete documentation and approval of the services provided, submit them to the finance department timely so that the services can be billed to the funders. And finally, in the budgeting process, preparation and submission of proposed program budgets for incorporation into the organization's overall organization budget, and adhering to the timeline established for the budgeting process. Collaboration is needed in developing policies and procedures. Some examples: policies and procedures regarding accounts payable and cash disbursements requires collaboration with your procurement or purchasing department, or you might just have an individual who assumes those functions. You'll need to collaborate with them for those policies and procedures. Policies and procedures regarding computer system access and backup requires collaboration with your IT department, or perhaps just your IT manager. You might only have one individual who performs that function. And also policies and procedures regarding your budgeting process requires collaboration with program and department managers. Collaboration is also needed in implementing and enforcing the policies and procedures. So creating an accounting policies and procedures manual and just leaving it on the shelf is not a useful document. Senior leadership and managers throughout the organization should discuss the policies and procedures and the importance of adhering to them when meeting with their staff and at mandatory training workshops that are set up to discuss the policies and procedures. Also, request feedback from staff as to the challenges they face in understanding and adhering to the policies and procedures. So it is important that everybody understands what the policies and procedures are, how they can comply with them, and why they are important to the organization. The next key component of a strong finance department is internal controls, which is checks and balances. Internal controls are processes implemented to provide reasonable assurance in achieving efficient and effective operations, reliable financial reporting, safeguarding of assets, compliance with laws and regulations, fraud prevention and detection, and importantly, preservation of reputation. You never want to do anything to jeopardize the reputation of your organization. Some examples of internal controls: review and approval, supervisory review and approval of organizational spending, check signing and electronic payments, requiring 2 authorized signatures for checks and wires in excess of a designated monetary threshold, and this threshold will normally be higher for larger organizations. Separation of duties. No one person should have complete control over all aspects of a financial transaction. So, for example, the same individual should not receive checks, record them in your financial records, and do your bank reconciliations. Organizations who might only have one finance staff member who oversees your finance function, you might have to engage a member of your board, it's usually your board treasurer, to assume some responsibilities. Another example is physical safeguarding of assets, keeping cash and confidential documents in a locked cabinet or secure online location with access given only to authorized personnel. And finally, bank reconciliations, performing monthly bank reconciliations timely with supervisory review and approval by an individual other than the one who performs the bank reconciliations. Collaboration related to internal controls. Everyone in the organization is responsible for maintaining effective internal controls. Senior leadership must set a positive tone at the top for the importance of adhering to internal controls. Some examples are review and approval of vendor invoices for goods received and services provided for programs and departments throughout the organization. So, for example, a program manager might have engaged an independent contractor to provide certain trainings for program participants. When that that independent contractor submits their invoice, the program manager will be required to review and approve that invoice before sending it to the finance department. That is a very important review and approval because that program manager is most knowledgeable of the services that were performed for which the organization will be billed. Also, ensuring proper supporting documentation is provided to verify that expenses have a valid business purpose. If your organization has a business credit card, review and approval of business credit card charges for all staff, even those at the highest level. So, for example, if your executive director has a business credit card, those charges should be reviewed as well. It's normally done by somebody on your board. It could be your board president or your board treasurer. Also, if your organization receives cash from program participants, keeping the cash received from program participants, as well as sensitive documents, in a locked cabinet or secure online location with limited access given only to authorized personnel. Also, proper authorization for purchases made for programs and departments and maintaining internal controls over the goods when they are received. So for example, if a program orders program supplies, making sure that the order is properly authorized and that when the supplies are received, proper documentation such as a proof of delivery is maintained and sent to the finance department to be sure that what the organization ordered is what it received and what it will be billed for. And finally, another internal control where collaboration is needed is in safeguarding physical property used by programs and departments. So it might be computer equipment, it might be furniture that you have in a location where you provide workshops for your program participants. These assets must be safeguarded with access given only to those individuals who need it. The next key component of a strong finance department is digital transformation, implementing automated financial systems. Finance departments use automated systems for many processes, including accounting and reporting, accounts payable, expense management, accounts receivable, grant management, budgeting and forecasting, and payroll management. Your organization might not use automated systems for all these processes. For example, you might use Excel spreadsheets for your budgeting process. There are several factors to take into account when considering whether to transition to using automated systems. The first is cost. The second is the complexity of your financial operations. So if your budgeting process includes a lot of individuals, using an automated system might be more efficient. And what data do you need? And can you get this data from your Excel spreadsheets, or would using an automated system be more beneficial? There are many benefits of implementing automated financial systems: maximizes productivity, increases transparency, facilitates workflow and approvals, increases data access, improves accuracy and timeliness. Collaboration related to automated financial systems. Non-finance department staff contribute to the ability of the finance department to maximize the efficiency and effectiveness of using automated financial systems. For example, by submitting, reviewing, and approving invoices, business credit card charges, and employee expense reimbursements through the automated systems in a timely manner. So the automated systems do facilitate the review and approval process. However, it is the responsibility of the individual staff member to input the data in the automated system in a timely manner. Also, by approving expenses only when accompanied by proper supporting documentation and general ledger account coding, such as coding to office expense, meals and entertainment. Most automated systems will require that you attach supporting documentation. However, the individual who is responsible for approving these expenses must actually review the supporting documentation to ensure there's a valid business purpose. I've heard people say that, oh, we use an automated system and I just press a button and I approve everything. That is not a meaningful approval. Also, by program and department supervisors requesting training by the finance department on the use of the automated systems so that staff is properly trained. So for example, if your organization uses an expense management system for your business credit cards, making sure that staff is properly trained on that system. If not, contact the finance department to provide that training, or perhaps the software vendor can provide that training as well. If your organization uses automated systems for your budgeting process, by program and department managers submitting budget data to the finance department in a timely manner for preparation and incorporation into the organization's budget, and also by your board of directors reviewing the proposed budget in the automated system and following up with any questions or comments they might have timely to meet the deadline for final approval of your organization's budget. The next key component of a strong finance department is effective contract management. Effective contract management is essential for maintaining the ongoing receipt of goods and services and for meeting financial obligations to vendors in accordance with negotiated contract prices. It's also important that senior leadership knows what contracts your organization has entered into and what their obligations are under those contracts. I have here several tips for effective contract management. Maintain and update an online database of all executed contracts, terms, and dates. There are many automated contract management systems available, but if you don't use them, you can simply set up a secure online share drive and in there maintain a database of all your contracts and designate an administrator to oversee the database. Also, scan all contracts and establish a secure central online location to file all executed contracts. In case questions come up regarding the contracts or their termination date is fast approaching, you should be monitoring those expiration dates and renewing them in a timely manner if it is your intention to renew the contracts, and also to ensure that all contracts for goods and services cover all your organization's locations. Collaboration regarding effective contract management. Staff members who are authorized to enter into contracts on behalf of the organization play an important role in effective contract management. Some examples: program managers who engage professionals for a specialized skill or activity, and they might have a particular expertise, should ensure that a contract for the services provided is duly executed, that it's signed by all parties involved and filed in your organization's contract database. If contractual services are extended to additional programs or sites, for example, food delivery services, ensure that the contracts are amended to reflect the agreed upon changes. So for example, when you entered into a contract with a food delivery service, it included food delivery for all the sites you had at that time, but over the course of the contract, your organization might have added additional sites for which the service is providing food. So it's important that you contact the appropriate internal party that you have. It could be your legal department, your compliance department, or other internal staff to be sure that the contracts are properly amended. Also, program services that are terminated prior to contractually agreed upon termination dates should be communicated to the appropriate internal party. So a program manager might decide that contractual services are no longer needed. That's also important that they communicate that to the appropriate internal party in your organization. And finally, monitor spending for contractual services and discuss with the finance department any significant variances from budgeted amounts. The last key component of a strong finance department is timely and accurate financial reporting. To ensure the reliability of the monthly financial statements, which are generated by the finance department, a month-end close process should be implemented. The statements are then distributed to senior management, the board of directors, and other third parties. I mentioned at the beginning of the presentation that this is one of the key responsibilities of the finance department to generate timely and accurate financial statements. Generating financial statements for the month of July in October is not providing meaningful and useful information to the users of the financial statements. These are several key financial statements that are normally distributed at month end. Statement of financial position, also referred to as a balance sheet, reports the organization's assets, what it owns, its liabilities, what it owes, and the difference between the two, its net assets at a point in time. Statement of activities, also referred to as an income statement, reports the organization's revenue, expenses, and net surplus or deficit, usually monthly or year to date. A budget versus actual, also referred to as a variance report, compares the actual revenue, expenses, and net surplus or deficit results compared to the estimates in the approved budget. And finally, a statement of cash flows reports where funds are coming from and what the funds are used for. So what is a month-end close? It's a formal, documented, and enforced process established by your finance department for reviewing the financial data in your financial records to ensure that it is complete, accurate, and timely before they close the books for the month and generate the financial statements. So why do you need a month-end close? Financial data is an indicator of the financial health of the organization, and this data should be reviewed throughout the year, certainly at least monthly. Financial health is a key indicator of the sustainability of your organization. And for example, when donors are looking for organizations to support on an ongoing basis, they want to know what the sustainability of the organization is. And for that, they will need timely and accurate financial data and financial reports. When should a month-end close occur? Since financial statements provide valuable information to senior management, your board of directors, and other third-party stakeholders, they should be presented timely. Books are closed for the month normally by the 15th of the following month, but this will vary from organization to organization. Your finance department will make that determination when they close the books, and they will generate the financial statements shortly thereafter. At year end, the books will be kept open for a longer period of time. It's usually about 4 to 6 weeks, so that all transactions and adjustments for the year are properly recorded. If your organization is required to have an annual financial audit, the annual financial audit will take place after the books are closed at year end. Collaboration regarding timely and accurate financial reporting. Non-finance department staff play an important role in the month-end close process. Some examples: prior to closing the books for the month, all vendor invoices, check requisitions, business credit card charges, and employee expense reimbursement requests for the month must be received, approved, and submitted to the finance department for processing and recording in the financial records. So for example, if your finance department only receives half the invoices for the month and processes them and records them in the financial records and generates the financial statements, when a user of the financial statements wants to know how much was a particular expense for the month for the organization, that will not be an accurate number because the finance department only received half the invoices for the month. Also, if your organization has hourly employees, making sure that their hours are submitted in the timekeeping system and approved so that the finance department can record all the payrolls for the month before they close the books. And finally, before closing the books for the month, documentation and supervisory approval for services provided must be completed and submitted for billing by the finance department. For example, progress notes completed and approved by program service providers and managers. Now I want to talk a little bit about the budget. The budget plays an important role in the operation of your organization. Creating and monitoring the budget requires collaboration between finance, leadership, and program staff. So what is a budget? It's a plan for how the organization will spend its money. It includes the sources of revenue the organization anticipates receiving and expenses it anticipates incurring. Some examples of revenue are government revenue, individual donations, monies that you receive from special events that you have. Examples of expenses are salaries and benefits, rent, and utilities. Why does an organization need a budget? A budget helps to allocate resources in accordance with the needs and the mission of the organization, and it serves as a tool to track where and how money is spent. An organization should prepare a budget not only for a particular point in time, but should also prepare scenario budgets. For example, a worst-case scenario budget. Let's say your organization has a major funder and you lose that funding stream. What would your budget look like, and what course of action would the organization need to take? Also, a best-case scenario. Let's say you applied for several new funding streams and those funding streams came through. What would your budget look like in that case, and how would your organization operate? The budget team does vary from organization to organization, but it usually includes your CEO or executive director, CFO, department and program directors, program managers, and other key program staff. Budget preparation and approval process. The budgeting process is a team effort, collaboration, and will vary from organization to organization. However, this process usually includes having budget planning meetings with the finance department, distribution and review of year-to-date actual results for the current year, possibly to use as a guide for preparation of your budget for the subsequent year, submission of preliminary budgets by programs and departments for incorporation into the organization's overall budget, review by the finance department and having follow-up meetings, and finally, review by senior leadership and approval by your board of directors. Monitoring the budget. Spending should be monitored throughout the year, identifying inefficiencies in spending, such as those that are not aligned with your organization's mission, and review your budget versus actual reports, which I mentioned is one of the key reports that the finance department should distribute at the end of each month. This is a sample budget versus actual report for a period of time. The left-hand column has your sources of revenue, government revenue, grants, possibly grants from foundations, expenses, all the categories of your expenses. The next column has your year-to-date actual expenses, followed by a column with your year-to-date budgeted expenses, followed by a column with the variance between actual and budget, and a column of your yearly budget. And finally, the last column identifies any significant variances between budget and actual, and any courses of action the organization might need to take as a result of those significant variances. Some next steps for leadership. Confirm that the finance department has an accounting policies and procedures manual that's distributed, enforced, and approved annually by your audit or finance committee prior to approval by your board of directors. Review with managers how they oversee staff in enforcing internal controls in their areas of responsibility, and communicate the importance of maintaining and adhering to the policies and procedures and effective internal controls. Ensure staff collaboration in effectively using automated financial systems in their areas of responsibility. Confirm that contracts are maintained in a central digital database, tracked on an ongoing basis, and accessible electronically. And finally, facilitate the month-end close by ensuring that staff adhere to deadlines established by the finance department to generate timely and accurate financial statements. I have overseen the finance department at many nonprofit organizations, and I can attest to the fact that this is challenging, having everybody throughout the organization submit all documents and transactions that are needed to the finance department so that they can close their books by the date that's designated. But that is a very important step to ensure that those financial statements are accurate and can be relied upon. Some best practices for fostering collaboration. Your finance department should identify areas where collaboration is needed by reviewing, documenting, and evaluating their operating procedures, and communicate to leadership the areas where collaboration is needed and why it is important to the organization. And conversely, programs and departments outside the finance department should identify areas where they need collaboration with the finance department, where perhaps that's not taking place. So for example, a program manager might be completing a grant application, and part of that application requires a budget for which they need the assistance of the finance department. It's important that they communicate that to the finance department so that the application can be completed and submitted by the date that's been designated. Also, discuss ways to promote collaboration throughout the organization and address challenges that might be encountered. Training is important. Train non-finance staff in areas where their collaboration is needed to facilitate and improve compliance. And finally, and importantly, provide guidance to non-finance staff in complying with policies, procedures, internal controls, and deadlines established for maintaining a strong finance department. Clearly communicate, answer questions, provide suggestions for how best to comply. And it is very important to always build upon a relationship of trust and understanding throughout the organization, collaboration, as you all work together towards the common goal of fulfilling your organization's mission. This is my contact information. I encourage you to visit my website. I have a lot of valuable resources to help your organization build and maintain a strong finance department. You can sign up for my newsletters. I offer complimentary consultations. And this is my bio, a brief bio of myself, and I look forward to hearing from you. And now there were some questions and comments submitted in advance of the webinar, some of which I would like to address. So the first question is if I have any recommendations for systems or tools to facilitate workflow and collaboration between teams, and any tracking systems for small organizations. That depends on the scope of the project. There are many automated project management systems available for larger projects. However, for projects that are a smaller scope or for small organizations, what I have used and I can recommend is you can simply set up an Excel workbook, and in there have a worksheet for each department that you need to collaborate with. So I was overseeing a finance related project and we needed collaboration with several different departments. So we set up this workbook, and with each of the worksheets were addressed to each of the departments that had a role. We put this document in a shared drive. The document each one had the task to be performed, the individual responsible for completing it, the target due date, the status, and the date that it was completed. And we put it in the shared drive, and each person responsible for a task would be responsible for updating the status on a regular basis. I was the administrator overseeing the project, so I made sure that the project was moving along, and we would meet. We would meet weekly to discuss everybody's progress and if there were any questions or comments that came up, so that we can be sure that the project was completed on time. I just want to emphasize that whether you use an automated project management system or you're using Excel spreadsheets, these are just tools. It's important that you have proper oversight and administration of these tools to make sure that whatever the areas that you need collaboration, whatever the task is overseen, and any issues that come up are promptly addressed. There was also a question regarding collaboration, providing any recommendations for development and finance working together. Development and finance have a very important relationship, and it's important that their records are in sync. It's important for donor relationships. For example, you never want somebody in your development department to call a donor and say, "Oh, we haven't gotten a donation from you for a while," and yet the finance department actually recorded that. They received the donation, recorded that in their records, but the information never got to the development department. So it's important for donor relations to maintain that, on an ongoing basis. Also for reporting. I know in our board meetings, there was always a presentation on the donations received and the pledges that were received. It's important that whatever's presented by the development department has been corroborated by the finance department. So it's important that there are reconciliations done, certainly at a monthly basis. There are systems that do incorporate finance and development and other processing areas in one system. But if you don't have that, if you use separate systems, reconciliation is important so that for example, if there are a pledge The development department might have recorded a pledge based on a phone call, whereas the finance department might only record pledges if they have something in writing and if there's a certain level of certainty that that pledge will be fulfilled. It's also important for collaboration between the two and that you document the procedures, how the information flows, and who's responsible for each of the steps in the process. There was a question also regarding resistance to change. Ideas for promoting better practices and tools that are beneficial to the organization, but face resistance to change. Whenever you're implementing new processes or policies or automated systems, you will inevitably face resistance to change. When I would do so, I would constantly hear from staff, why do we have to do this? We never had to do this before. And I would explain to them on the procedures and the policies. What I've presented in this presentation is that if finance doesn't have these policies and procedures in place, the organization cannot fulfill its mission. It's important that for automated systems, when I would oversee the implementation of automated systems, it's important that there are people, most people, I would say, embrace new systems, but I did always encounter those who were not computer savvy or were just really more comfortable with the systems they currently use. So they would resist any new systems we implemented. So a recommendation for that, and what I and my staff had done, is we offered one-on-one trainings to these individuals. We would do a screen share of the software, walk the individual through how exactly to use the system in their areas of responsibility, give them as many trainings as they need. And when they felt comfortable with the system, I inevitably got feedback from them. They would thank me for the automated system because it did facilitate what they do and it gave them more access to information that they need. Also, the last area that I want, and I'll take some questions that came in the chat. As far as automation is concerned, there was a comment about not having the right IT equipment. I've heard this actually from several executive directors that we purchased an automated system, but we can't use it because it doesn't really work the way we operate. So my recommendation is that when you are looking for and implementing an automated system, make sure that it processes data the way your organization operates. For example, in one of the organizations I work for, we implemented an accounting system and we did a lot of cost allocations, and we had a very specific methodology for allocating costs. The out-of-the-box system did not provide that allocation, so we needed customization to the system, which is an option. However, that customization can be costly, so it's important that you research the systems to make sure that what you need is what the system can offer. Also, it's important to determine what's customer support the software vendor has. They might be in a different location across the country, a different time zone. Will the support be available during your working hours when you might need them? When you've decided on a system to implement, it's important that you have a well-defined plan. Nonprofit organizations traditionally don't have a robust staff for implementation. So make sure that you have a well-defined plan for who's responsible, the tasks that need to be done, and the timeline for completion. Designate an administrator over the project to act as a liaison between your internal staff and your software vendor to make sure that the implementation is completed on time. And finally, before you roll out and launch any automated system, I recommend extensive testing of the system before you launch it. I always say that if you launch an automated system that has a lot of glitches, you will lose the confidence of the end users as to the benefit and reliability of the system, and you will waste a lot of time. And now I just would like to open it up to any questions that came in the Q&A. There were some more submitted previously, but are there any in the Q&A to address?
I'm just scrolling through, Roberta. I know one of the things that's come up, we've been doing a few webinars recently just around, our grants that are open. And I've been fielding a lot of questions from, really grassroots, emerging nonprofits, folks that, it's sort of, they have no paid staff or maybe one paid staff. And in a lot of cases, the work that they do is really, they get a lot of in kind. So it could be like a food program. So, any dollar they get in a donation, they're purchasing food and putting it out in the community, or it's, going back to, right back out to the kids. And I think some of these groups are struggling, or, they have a lot of questions around, how do we document that? How do we do that? So one of your things that you mentioned was, just having these Excel sheets. I think is just a good start, if you don't have the software or the system. But any guidance for these, new organizations where that they don't have big contracts, it's really about small donations or a lot of in kind, and how they might be able to document and start building a system like you've walked us through.
Yeah, whether you are a one-person organization just starting out or a large organizations, it's important to have the basic system in place. So if you're trying to track donations, different kind of donations, you can set up, and we've done this, I've done this even with large organizations, you're setting up an internal share drive and you call it donations, and you have subcategories of the types of donations. You obviously need the documentation. It's all about documentation. In each of those subfolders, as you get that donation, you file it there with the supporting documentation. As you grow, you'll have that available. This is, down the road for those organizations that have audits. Auditors are always asking for documentations for significant transactions. So you can simply just set up a secure internal share drive where you manage the different categories. Internal in terms of, so that's for the documentation, but in terms of the internal controls, I speak with a lot of people, it's just me, there's nobody else. You still need to have procedures, documented procedures, to know what needs to get done and when it needs to get done. And the most important is the internal controls. You might just be one person, but unfortunately we live in a world now where there are things that are going on that, we read about in the paper, and we never want that to land in our organizations. So you must have those internal controls in place. It must be documented to be sure that they're being followed. If you have more than one individual, documenting this is important so that everybody who's involved has the same set of rules. We're all following the same guidelines. We all know what we need to do when we need to do it. So, I've set up operations manuals for very small nonprofits, and it will include everything. When do you do your bank reconciliations? How do you receive checks? If you get 2 donations or 5 donations, if you use a very simple, like a QuickBooks, to manage your accounting, I find that's pretty user-friendly for a lot of, not recommending anything, but pretty user-friendly for small nonprofits. It will help you. It has a lot of functionality of how you can manage, documents and processes. So it is important that no matter your size, there's always Excel. I know people everybody's for automated systems, but they're costly. And I've done pretty large projects using these workbooks, and I just was on top of it. And that's what you need to be. It's the personal intervention. You make sure that everybody's doing what they need to do when they need to do it. And we wrapped up our projects on time, and everybody did what they needed to do.
That's great. Thank you. Thank you so much for that. Yeah. And I'll just say, I know in the past with some of our community grants, we have awarded funding to organizations to do just that, to help them establish that system, for tiny groups where they're like, we know we don't know what we don't know, and just, sort of bringing in a consultant or bringing someone in to help them, build that system. And I think it's a great, great use of our grant dollars for sure. Because, if you want to grow and you want to do it right, you
Right.
need
Right.
these systems in place. So no, this is wonderful.
Yes, and that is important because your organization will grow. And if
Yeah.
you have that base, if you have that basis, you're just adding. You're just
Right.
adding additions. You're not reinventing the wheel. Every time, let's say you get a new grant, I've had people contact me, oh, we got a new grant, we have no idea what to do. If you have the system in place, you take what you have and you just expand it and you just add on. And as you grow, and then you might at some point be ready for an automated system, but you've got the structure in place. So I always emphasize it's really important to have that basic structure.
Right. Any other questions from the chat? Folks on the call, and we're getting to the end of time here. If anyone on our team had any thoughts, Liz and Kate, have you been getting any questions in our last weeks? Again, once you open our grant applications, we get a lot of questions coming in.
If you don't have any, we had a question in the previous, was more like a comment, is challenge having staff follow internal controls. You know, it really is, you know, it's not a luxury anymore. And I think because of downsizing of staff, sometimes internal controls got lost. So you might have had two people doing a certain function, but one of the staff, unfortunately, you had to downsize. So what do? As I mentioned in the presentation, you might have to engage a member of your board, but it is important to never give it those and you must have everything documented. Everybody wants the same set of rules to know that these are the internal controls that we have and we follow them. And that's, you know, it's called preventive control. You want to prevent something from happening before it happens. If it's after the fact, you got to figure out what the damage was. But if you have the internal controls in place, it's important to be firm. These are the controls. I always said it was challenging. Sometimes when I would implement these procedures, it would take months to get everybody on board. This was in larger organizations. They would just say, we can't. But we got it. We did it. We got them all on board and they were glad. People like to know the rules. How do I operate? So it's really important to be firm in what you're implementing. And if we have one more minute, I just want to emphasize that we talk about collaboration. So collaboration is not only about getting documents from other departments, it's also about understanding what other departments do and how the information that they give you relates to what you do. So in order to do your job, the organization, in a lot of ways, you're all connected, or a lot of areas are connected, or even if you have a small organization with two departments, you're connected. So understanding, when you collaborate with people, you meet with them, you discuss, you understand. I always emphasize that to my staff so that they understood, so that when a change was made to the other person's procedures, they would say, oh, if that changed, then mine changes, because we're related, you know, what we do is related. So that's why collaboration is important. You know, communication and discussion is really important as an organization.
Great. Well, thank you so much, Roberta. I mean, this was so incredibly applicable to have this, you know, set of tools, to have this guidance. You also just have such a reassuring, calm presence that for someone who does not work in finance, so like this was really helpful for me personally. So thank you for that. And so before we go, I just want to share a few housekeeping items. We will be sending out a follow-up email. So I have a copy of the presentation and a link to the recording. So, you know, please share this out with your teams. You know, if you're just one person at your organization, or your board members, if they have these responsibilities, if they're picking up some of those duties. Again, I just want to give a pitch for our community grant applications are open and they are due August 15th. We're also accepting many other applications with various deadlines throughout the fall, but that August 15th is the priority right now. Before you submit, be sure to visit our Tools for Nonprofit page on our website, and you can see our other recent webinars about the application process and some of our other webinars that we've had in recent months. We have no letters of inquiry this year. It's just full applications. And if you have any questions, please email us at grants@communityfoundationshv.org. And our team here of Liz and Kate and myself will get back to you. And if you have not been getting our nonprofit newsletter, please drop your email in the chat before you head out. It's a great resource, and we've been very consistent with it, and we're thrilled to be putting that out in the community, and we want to keep you in the loop. And then just thank you to everyone for joining us today. And thank you again, Roberta. You're so generous with your expertise. And I just hope everyone has a great rest of their day. Thanks so much.
Thank you.
Just give it one more moment before we do an official welcome and intro. Yes, you will get slides. We're going to do a follow-up. We're recording this today, so we will send the recording and the slides afterwards. Just give it one more moment before we do an official welcome and intro. Yes, you will get slides. We're going to do a follow-up. We're recording this today, so we will send the recording and the slides afterwards. Hi, I want to be respectful of everyone.